let's delve into that currency market. Can I safely say that there's risk on trade back into the market, or do you think this perhaps is something that has just been occurring because of the massive fall-off that we saw over the last couple of trading sessions?
Well, certainly there has been a massive fall-off, and you mentioned that trade all the way up to R7.50. It in fact happened on Monday night in New York after the close of our trading, and I think it's just a technical situation there as well. There were orders left outstanding and suddenly they were triggered, and of course then that one pushes the currency weaker, and then it triggers more, and it's a very much of a sort of falling domino effect, and all of a sudden have moved from 720 to 750 on not that higher trading volume, and it's come back quite a lot now as exporters come into the market. They're looking to convert their dollar earnings into rands, and that maybe has settled it around about the 715 level just for the time being.
Yeah, well, I spoke to John Keynes on Monday about the local currency, and he said that the rand could actually head closer to 9 or even 10 rand to the US dollar in the next couple of months, and he also said he doesn't want to sound alarmist. Do you think that this is a possibility that we could see the rand heading towards 10 rand to the US dollar? Does that mean a substantial outflow of money out of the country?
Well, it would. 7 rand to 10 rand. Hey, that is alarmist. That's all there is to it. And I don't think that the state of the economy, the state of our global trade, suggests that we should be, from fundamental views, that it should suffer to that extent. Of course, if there's a complete withdrawal of global risk appetite, then that could happen. I don't think that'll happen. There's still quite a significant inflow of foreign funds into our bond market. Already this month, it's only a week old, we've had over 6 billion flowing into the bond market. Yes, offset by some outflow from the JSE, but I think that just suggests too much of a domestic and global meltdown.
Wow, that's very harsh words. We'll get into the meltdown and the possibility of it going even further. But taking a look at the volumes for today thus far on the JSE, 8 billion rand passing through the market, and it's only 12 o'clock in South Africa. Richmond is up 9%, Kumba is up 7%. So yes, we're starting to see sharp and aggressive moves to the upside, but it's being met with very high volume, Ian.
Yes, look, that volume is really quite impressive, and it may just be, once again, the market was short of the JSE, and these positions weren't able to be covered yesterday, except if they could trade in London, have been covered now and reversed, and maybe it's a view of a short-term recovery coming up. The index fell from that sort of pivotal level around about 31,000, came down quite strongly. We're still 1,000 points below that, so yes, it could go a little bit more, and this volume is going to help to drive it in the short term.
Have you been buying over the last couple of trading sessions, Ian? What have you been doing with the market? Would you say that you should be embarking on shorting some of the stocks? Are you selling out of positions? What are you doing?
Well, my view would be it's an opportunity to sell into strength where one has had short-term positions on which there is still some profit left on the table, and I would prefer to do that. I think that the deterioration in the economic outlook, starting from the US, globally, and Europe, is going to mean that our market could come back a little bit more. Just look at our export prospects. Certainly our biggest international trading partner, Europe, really in the doldrums. I think that suggests that a lot of our major companies are going to find lower revenue sources in the 6 months ahead. So I would not be accumulating now. I'd be more wanting to take profits.
Tell us about fundamental factors and how much that's driving share prices, because we've got ArcelorMittal, last I checked, at the bottom of the top 40. It's down 3.25%. The company says that its furnace at Newcastle plant has failed. It's going to be out of service for 2 months, and to meet customer demand, it's going to have to import steel. Is this necessarily a bad thing? Because we know that perhaps importing steel might just be cheaper than actually producing it in the country.
Well, if they're controlling the price for sale to their domestic currencies here, they're still controlling that price, and it may not mean that South African users get cheaper steel. It should. We'll have to wait and see about that. But I think it does then take away the argument by the consumers that they can get steel at a lower price than ArcelorMittal has been supplying it, and I think it's going to be an interesting development to see this.
With regards to the central bank, if we could just turn our attention to consumers, it seems the central bank is saying that despite all the worries and woes that are occurring in the developed world, that the South African consumer looks relatively strong at this point in time. And we also know that the government, the central bank has accumulated forex reserves on a substantial scale over the past while. Last week was saying that it's not going to change its foreign exchange mix. What do you make of the rhetoric from the central bank? Do you think that they are trying to give the market a certain message?
Certainly, by saying that the reserves have been buoyed, that's a very positive factor. You know, I think at this stage we could probably cover at least 7 months of imports. Now that's moving in the right direction. 6 months is the global minimum benchmark that we should have. So we're moving positively there. In the longer run, that's going to be rand supportive, and that's a very healthy state. To say though that the recovery is going to be led by consumers, I'm not so sure about that. Yes, consumer debt has come down to some extent from over 80% of income down to about 76%. But you know, when this cycle started, it was only at 50%. So it needs a lot further to come back, maybe not to that level, but to reinstate healthy levels. And if you just look at new credit demand, around about 5% on a year-on-year basis, having recovered from a negative number, but the long-term average is 15%. We're not getting there. We're not getting pushed by, the economy is not getting pushed by rising consumer spending.
Ian, let's touch on UraniumOne. The company reported production for the second quarter this year, 2.4 million pounds, 33% higher than the production that we saw in the second quarter of 2010. What's also interesting to note is that cash cost per pound was sitting at around $15, and the sales price per pound was $58. So fantastic margins coming through there. But then you've got this big cloud, this dark cloud, about what the fate of nuclear power is going to be.
Yes, and you know, up until the Japanese tsunami, I would have said, gee, this is a great outlook because South Africa was seriously considering nuclear power. Now it's become a socially unacceptable subject to mention now. But in the long run, we can't go on, dirtying the atmosphere through our coal-fired power stations. Really, it's endangering the whole population, and that's a worldwide problem. You know, Germany said they're going to cut out all of their nuclear power stations, but what's the alternative? Difficult to find it. Maybe we'll find when the fuss dies down, we'll go back in that direction, and that's very good for UraniumOne in the longer term. Good market for them.
Okay, so does that mean a buy on UraniumOne, Ian? Are you buying anything at all?
Apart from holding on to gold, I'm really right now. I'm rather, as I said, I'm more inclined in the camp of conserving capital, taking profits where they're showing up on a short-term basis, because I think that later in the year we're going to get some good opportunities, because I do believe there's some big levels have been broken, and I think we're going to see the market slide down, maybe not crash, but slide down at least another 10-15% over these few months, and that will present the good opportunities.
Okay, well, I see you saying that with quite a big smile, so it makes me optimistic and hopeful for the future. Ian, thank you so much for joining me. Much appreciated.